Hello, everybody, and welcome. This is Wiley Solution Walkthrough for Accounting Tools for Business Decision Making. This is their 8th edition, problem 14-4. The textbook authors are Paul Kimmel, Jerry Weingant, and Jill Mitchell. The question used in the presentation is copyright 2022 by John Wiley & Sons, or Wiley. All rights are reserved. This is for educational purposes only. The video may not be distributed or redistributed without the express permission of Wiley. The solution presentation is copyright 2022 by Bennett Tchaikovsky. All rights are reserved. The opinions contained within this presentation are those of Bennett Tchaikovsky and not the authors of the textbook or of Wiley. All right. So before we say thank you, Wiley, we always want to thank Wiley for allowing me to do this. Let's go ahead and take a look at problem 14-4. So these are the following data were taken from the records of Clarkson Company for the fiscal year ended June 30th, 2025. So we've got here a bunch of information about raw materials, work in process, accounts receivable, all this other kind of fun stuff. So the first thing it's asking us to do is to prepare a cost of goods manufactured schedule. And if you've watched any of my videos on this particular topic, I'm not a huge fan of that traditional way of going through and using a schedule to determine cost of goods manufactured. What I prefer to do is to use T accounts, right? And my last name is Tchaikovsky, so I'm going to, of course, be biased to the letter T. But over here, I love using T accounts. Why do I love using T accounts? It's the most awesome way to learn managerial accounting and as well as financial. So when we're looking at these different kind of T accounts, right? And this is really kind of telling us the flow of how things go, how things start, and how things go through and ultimately finish. And then ultimately, we're going to be coming over here. So what is the real flow to these different questions? Well, we're going to be starting over here with a little bit of raw materials. And let's make all of this bigger. And then we're going to have our factory payroll. Okay, and then we're basically going to have our factory overhead. Now, why are we keeping these here? Because what happens is once we start putting these raw materials into production, this is going to give us to work in process, right? So the raw materials are going to come here. That's what we call direct materials. And then basically the labor and the overhead are going to convert these raw work in process into our finished goods inventory, right? Our FGI, WIP. And then we're going to have over here, we're going to have our cost of goods sold. Okay, so that's kind of how we're going to go through and set up these questions. Let's go put in the data that we know. So our raw materials inventory had a beginning balance of on 7/1/24 of 48,000, ending balance over here of 39,600. Our work in process account, which it goes to finished goods, but let's just go in order. Our work in process had 19,800. And this had an ending balance over here of 18,600. For our finished goods inventory, we had an opening balance of 96,000, and then we had 75,900. Okay. So beginning, ending balance. So again, that's 96, 75, 75,900. 19,008, 18,600, 48,000, and then 39,600. We also see over here in terms of factory payroll, right? So let's go through and kind of look at this. So factory payroll is made up of two different items. It is made up of both direct labor and indirect labor. So over here is my factory payroll is going to be our direct labor, which is going to be 139,250. Plus our indirect labor of 24,460. Okay. So this is going to be 139,250 plus 24,460. Okay. So when we also go through, when we look at this, what happens? Let's go ahead and let's put in the rest of the different items. So we've got over here, we've got accounts receivable. Does accounts receivable go here? The answer is absolutely not. That is a balance sheet account. Remember, what we're trying to go through and do is we have our sales less our cost of goods sold is our gross profit, right? Less SG&A is going to give us our operating income, right? So over here, when we're looking at this, we're trying to determine cost of goods sold. Accounts receivable is a balance sheet item. But what about factory insurance? Well, it has the word factory in it, so we got to put it down over here. So our factory insurance, and this is going to be, we'll kind of put this here and then make it like this. Okay, so our factory insurance was 4,600. Our factory machinery depreciation is going to be 16,000. Our factory utilities are going to be 27,600. Now, in terms of going through and looking at the office utilities expense, that's going to be selling, general, and administrative. Sales revenue, and then basically sales discounts. Those are revenue, contra revenue items. The factory manager's salary that I would be putting into factory overhead. Okay, this is going to be 58,000. Factory property taxes. This is going to be 9,600. We're going to have factory repairs. Factory repairs are going to be 96,400. And then we have cash, right? So cash is not going to show, excuse me. Factory repairs are going to be 1,400. Okay, raw material purchases. This is my beginning plus my purchases. My purchases of raw materials were 96,400. That does not go into factory overhead. So then we've got cash in terms of being over here at 32,000. So what we're trying to figure out is what is our cost of goods manufactured? Now, what is cost of goods manufactured? It's going to be the amount that we're sending out of work in process to our finished goods inventory. This is what we call COGM, or COGM is another way of saying cost of goods manufactured. Okay, now what we get to now go through and do is we're going to be playing a balancing game, meaning that we're going to balance out all of these accounts. So I'll start with raw materials. Okay, does 48,000 plus 96,400 equal 39,600? Well, according to Zapparanagan, it does not. So over here, what we're going to do is we're going to take 48 plus 96.4 minus X equals 39.6. Please say over here, 48 plus 96.4. So this amount is 104,800. Always, always, always check to make sure your numbers work. If they don't, it's not going to be a good day. This over here is what we call our demon master, or our direct materials. Okay, so our beginning work in process was here. So this is how much we put in terms into our production during the month. Now, when it comes to factory payroll, I kind of laid this out purposely like this, because over here, our direct labor is 139,250. And the direct labor is going to go directly into work in process, right, of 139,250. But the indirect labor is going to first go through and travel of 24,460. This is going to first travel down over here to factory overhead. And then it's going to then go into work in process. So our factory payroll, we have to make sure that this balance here goes to 0. Right? If I look at this over here, this has now gone to 0. Our factory overhead also has to go to 0. Okay, so over here, how do I make this go to 0? Well, I've got 4,600, 16, 27,6, 58, 96, 24, and then 1,400, or 141,660. If this is going to need to go to 0, I'm going to need to credit this amount here for 141,660. Once I go through and do this, this is now going to have a 0 balance, which is what I need. And we'll see in job order costing how this is going to get changed up a bit. But for right now, My factory overhead is going to be right over here, right? So this factory overhead leaves here and it's going to go into work in process. Factory payroll and factory overhead have to have zero balances. So when we look at this now over here, we ask ourselves a question. Does 19.8, 104.8, 139, 250, and 141, 660, does that equal 18.6? And if you said yes, I'll see you in financial accounting. I'm just kidding. Right over here, we've got, this is going to be 386, 910. Like, how did I go through and do that? Well, 19.8 plus 104.8 plus 139.25 plus 141.66 minus y equals 18.6. So essentially, just want to check my work. 19.8 plus 104.8 plus 139.250 plus 141.660 minus 386.910 equals 18,600. So that's our work in process, right? So this is going to travel over here to our finished goods inventory. So this is our cost of goods manufactured. Now let's just see something here. Oh, 386,910. I guess we got that correct. Very exciting. Okay. So this is why this is a lot easier to do than that cost of goods manufactured statement. But again, ask your instructor and don't do anything illegal. So over here, what you want to be going through and doing is 96 plus 386,910 minus 75,9 gives me 407,10. So this is going to be the amount that's going to come over here to whatever I have to balance with finished goods is what's going to be coming over here to my cost of goods sold. Now, the next thing we're being asked for is how do we determine disgusting profit, right? How do I determine gross profit? Well, over here, what gross profit is going to be is we had sales. Our sales amount was 534,000 less our sales discounts, right? And this again is a contra revenue account. We learned this in chapter 4, going back under the inventory section. So this is going to be 4,200. So our net sales is going to be over here at 529,800. From our net sales, what we're then going to go through and do is we're going to say less cost of goods sold. The cost of goods sold that we just determined that we had was over here at 407.10. So our gross profit is going to be, drum roll please, 122,790, which is basically right over here at the gross profit amount over here. Okay, so that's our gross profit. Now let's go ahead and we're now being asked to prepare the current assets section of the balance sheet. What are current assets? Are those assets that are electrified? No, they're not. That's my dad humor for the day. No, current assets are anything that we're going to be using in the current year. So what are those going to include? Well, in our case over here, we're going to have cash. The cash amount was 32,000. We're going to have accounts receivable. Our accounts receivable over here were 27,000. Okay, and then as we look at this over here, all these other items over here, there's no equipment. Well, actually, equipment would be non-current. But now what we have to go through and do is say, okay, what are the inventory balances? And for the inventory, we're going to have, it's going to be a little bit different, right? So what's left in inventory? Well, it's only going to be 3 items. It's going to be, so for our inventory, we're going to have raw materials inventory. We're going to have work in process or work in progress inventory, and then we're going to have finished goods inventory. So my ending raw materials is going to be 39,600. My ending work in process was 18,600. My ending finished goods was going to be 75,900. So my total inventory, right? Again, inventory is a current asset. It's going to be 134,100. So my total current assets are going to be over here. And this will be 32 plus 27 plus 134,1 gives me 193,100, which is what this amount here equals. So we got this correct. Now, when I'm doing if I'm ever asked to prepare like these different sections, right? You know, you want to always give the readers some kind of context, right? So the name of the company here is Clarkson Company. So we would say here, Clarkson Company income statement partial for the year ended 6/30/15 or 25. And then over here, for this one over here, we would have Clarkson Company balance sheet, current assets only as of 6/30/25. And then you would just basically say over here, you would just show current assets. Remember is that when we're ever showing, you know, this is really when we're dealing with managerial accounting, we're always dealing with like internal financial statements. What we always want to kind of be careful about is we do not want to show these without to a user of the financial statements without any kind of context. But here, because we're in managerial accounting, which is really much more for internal reporting purposes, we're not as concerned as much with rules. Okay. So that's why I can do cost of goods manufactured with T accounts. It's exciting. But in any event, and just to kind of show you the insanity of cost of goods manufactured. So just give me a moment. So again, my showing you this is just to say that, do you want to do something like this, or do you want to go through and use the T accounts? I mean, this is just, you know, nuts. I would really, frankly, this to me is using the T accounts is just a much easier way to kind of go through and do it. Again, it's going to be really up to your instructor in terms of what they're going to be looking to do. I've seen some instructors who do not like what I do here, even though it's getting you to the right result. But, you know, there you go. You can't like always win and fight against City Hall. But I'm not going to teach you that crazy cost of goods manufactured way, because frankly, I don't, you know, I could figure it out, but I just don't want to do it. I like T accounts. So in any event, I want to thank Wiley and thank you guys for watching here today. Please don't forget to like and subscribe, and I look forward to seeing you on the next video. Have a great day.